Activity-based costing by Claire Rich. So what is activity-based costing? Activity-based costing can be defined as an accounting method used to find the total cost of activities necessary to make a product. This system assigns costs to the individual activities that go into production. But this can be a little confusing. Let's use an example to explain activity-based costing a little better. Sally owns a shoe shop. There are various overhead costs incurred, such as electricity for sewing machine, which is a unit level cost that are incurred each time a product is produced. There are costs to transport the shoes, which is a batch level cost. Batch level costs are incurred for each batch of goods that is produced. Shoe quality testing, which is a product level cost, incurred for the production of each type of product produced. And finally, a shoemaker training, which is a facility level cost, which are costs that sustain the overall manufacturing and facility processes. If Sally wants to calculate how much overhead costs there are for each pair of shoes she sells, she could simply divide the total amount of overhead costs by the amount of shoes that she sells. However, Sally also sells socks. This creates a problem as shoes incur a higher overhead cost than socks do. In this case, Sally needs to use activity-based costing. Overhead costs are split into different cost drivers. For example, repair and maintenance of factory equipment is a unit level cost, containing typical cost drivers of the machine hours, labor hours, and number of units. Product design is a product level cost, containing typical costs of the number of new or improved products. Equipment setup is a batch level cost, containing typical cost drivers of the number of setups. And building depreciation, which is a facility level cost, containing typical cost drivers of the amount of time passed. Sally can then figure out the total cost drivers of each activity there is, and multiply the amount by the overhead rate of that good to figure out the total estimated overhead amount for that activity. So why is this useful? This allows Sally to consider the direct and overhead costs when manufacturing her shoes. By doing this, she's able to more accurately set prices and determine which overhead costs need to be reevaluated.